Good morning. This is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Tuesday, we took a total of one trade, one winner for a total absolute return of $1,987 or 0.9% in our 1% risk model portfolio, where we are risking no more than 1% per trade. The trade was 7,500 long calls, again for 0.9%. It was a pretty straightforward session. Conditions were bullish from the pre-market, with XLK outperforming, closing up 2.9%, semis 4.5%, cyclical sectors green. Now, where we did see some weakness was in defensive sectors, staples, and utilities, although their impact on the S&P 500 is minimal. The VIX opened with a gap to the downside, a bit of a pop here at the open, but peaked at 18 and continued to contract. That was a supportive variable for the S&P 500, with the VIX following through on its minor downtrend of lower highs. That is the past few trading sessions. Now, we were buyers around 74.75, 74.72, looking for this to hold, which was the pivot point over the past couple of trading sessions, and looking for a move up into the logical upside target of 7,500, 7,510, 7,500 big balanced gamma strike, 7,510 a key transitional level, and essentially the upper bound over the past two trading sessions. For today in the pre-market, all major U.S. equity indices are trading lower. S&P 500 down 0.3%, NASDAQ down 0.9%, Russell 0.4, Dow 0.1. Meanwhile, the VIX is up 3%, trading at 17.6. Levels dynamics largely unchanged. We remain below the SPX flip level, 75.10. Bulls need to reclaim that to reestablish meaningful control. Above that, we have the previous session's high, 75.15. A break implies continuation. Also, entry into a gap zone, fill 75.34. Kind of a cluster of levels around that gap fill. But if bulls can break through that zone, it opens the door to 75.50. On the downside, support previous session's low 74.68, zero gamma 74.65, and that pivot point is around that 70 handle. Below that, we have a gap zone. Fill would be 74.45, with major support at 74.30, 74.25, with the SPX put wall at 74.26. VIX levels, we have 16.86. This is the previous session's low. We are opening with a bit of a gap to the upside here. So if we do see continuation of this downtrend, potential target is back down to 16.86, followed by 16.5, which we're all familiar with because we traded that level for more than a week. On the upside, 17.7, 18, that is the previous session's high. A break opens the door to 18.5, 19, which remains the major pivot, the macro pivot. So we want to continue to keep an eye on volatility, potential exacerbating factor, and maybe there's a bit of a trend line here. So if we connect the swing high here, 1, 2, 3, potential resistance. But when we're below the flip levels, potential for more active volatility. And vol's been quite active here, bid up on some geopolitical headlines, or let's say increased escalations in the Middle East. So we continue to want to pay close attention to the VIX as well as sector performance, as rotation has been the primary theme. Transitioning over to our dashboard, total gamma exposure for the SPX is positive 380 million notional, although much more neutral than imbalanced. Trading below our main transitional level of 75.10, that is the volatility flip. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. Now, recall yesterday between 74.75 and 75.10, it was much more of a neutral zone. Some strikes positive, some strikes negative. That is not the case here today. So below 75.10, a potential for more downside volatility. With the implied move here today, 0.7%, that is 75.62 implied high and 74.56 implied low. There are no catalysts in the pre-market or intraday today. Calendar is light this week, but we do have mega cap earnings. starting today after market close with Google and Tesla reporting results. So keep an eye on the megs, technology, semis for that directional skew and last minute positioning with the potential for late day reversals if it is a trending day.